This is our Forex blog for March 27th, 2013. And this is one of the easiest ways of trading. In the future, I'm going to have a beginner section of our blog, and towards the end of it, go over more advanced um, trading methods. But today, I'm going to keep it focused on some of the easiest ways of trading. This is basically a chart of the dollar index, the euro index. I created it myself, doesn't exist anywhere else, and it lets you visually see what the trend is of each individual currency. And then you just simply buy the strong ones versus the weak and sell the weakest ones versus the strong. And you can also spot amazing patterns like when a trend line is broken. That's usually the end of the downtrend, at least until it gets broken on the upside here, or from above. You can spot double tops. You can, and one of the things that's new in today's release is I now have the weekly point of controls on there too. You can see the dollar index point of control fell 58 pips from the previous weeks. The value area of the previous day was up 12 pips from the day before. So you can see quickly that the dollar and dollar currencies as a whole went up a little bit yesterday, just a tiny amount, but last week fell a pretty significant amount. This is very likely to be the high today. And so when it works its way up there, you can, especially the second wave up, get short right here and here. The second one wouldn't have made much. The first one, if you traded that against whatever was strong at 8 o'clock, you probably did very well. These patterns are very predictable in that fashion. You can also go and put a 30-minute, 60-minute. These work on daily and weekly charts too. You can see on the 60-minute euro, the trend is down. The point of control fell 117 pips last week. Again, this is where most traders have positions in all the euro pairs from last week. And you can very easily see that on the chart. It spent most of its time somewhere the lows of all these bars right here, the highs of this bar. That's why the point of control is right there. And it's a very predictive tool, knowing what the previous weeks and previous days trend is. Last week went down a lot, yesterday went down considerably, and so when it's going sideways right here and breaks out to the downside, and especially when it breaks the previous day's euro index low, great places to sell. We know that the Swiss fell 47 pips yesterday, so it was pretty much close to as weak as the euro was. And so any kind of false patterns to the upside, double top right here, great place to sell. Let's also pull back to the point of control of yesterday and also the hourly moving average. The Australian went up 14 pips yesterday, not a super big amount, but it's more likely to find support here at the previous day's low because it was in an up day the previous day, just as the previous day's low is more likely to be broken in the euro because yesterday it fell so significantly from the day before, the point of control at least. You can also very easily see the low was held in the yen, and when it finally broke out later in the day, that's a wonderful place to go long, and you want to kind of draw your trend line up on this and stay with it until possibly right here you go short. That may or may not have made you money. The double top here at the high, once trend lines get broken, sometimes they'll make one more wave up. Great place for a counter trend. Some of these methods might seem obvious to anyone who's traded for a while. But they may be advanced topics for new traders. So until I come up with a section for advanced traders only, I'm going to go over all kinds of different methods. Here you have in the pound a nice down wave, found support at the previous day's low, broke the trend line. So after 9 o'clock, you could be looking for small buys in the pound, but it's probably likely to find resistance right here because the point of control fell 33 pips the previous day. And so, all right, let's look at some of the first trades here. The weak euro, the strong dollar, the strong yen. So obviously you want to sell the euro dollar. You want to sell the euro yen. Looking at this chart, you can see it was underneath its hourly moving average all day. The perfect oscillator makes a great place to consider exiting your trades when it hits the 80 level or it goes through our lower bands and pops back above them. It's usually the end of the move. You can also look for sells when it hits the upper band. This first trade didn't work. But then, so you have a trade right here where you're short, you make 20, 30 pips. You short again right here, you probably lost 8 or 9. Short again right here, comes down to the lower band. Usually it stalls here or here, so you might exit half your trade there and half your trade here. Second trade here you made somewhere in between. Your average exit would have been halfway in the middle here. You made 10, 20, 30, 35 pips. So it clearly got back to 6 or 8 pips you would have lost here, and then you also had 15 to 25 pips on that one. When you see, again, it pull back to the upper Bollinger Band on my perfect oscillator, it's a pretty decent place to look for a sell. You got another area right here, and it has to break down underneath the previous bar's low, so you would have actually gone short right there. And typically, once the currency goes down underneath the band, they'll make 3 waves down, sometimes 4, but then they start reversing. So there's 1 wave, 2, 3, there's your 4th wave. You can start looking for small counter trend trades when they hit the lower band, especially if it hits the 80 level. Let's take a look at the Euro Yen. Remember, the Euro index was clearly showing weakness. The Yen was showing strength. When this broke from above to below the hourly right here, not a bad place to go short. Notice the extreme in the perfect oscillator. So the market, you might have got out of that trade with a small win. Wait for the next pullback right here. A retest of the hourly hits the upper band. Great place to go short. That's the one that really takes off. And you might have got out somewhere around here because the perfect oscillator is showing a little bit of extreme. If you don't get any kind of a bounce off of that, you might give it another shot and then get out of your trade right here. And at that point, I'm waiting for a little bit more of a pullback back above the 2.0 bands right here. You can see it gave that sell signal and told you to get out. Pretty decent place to get out. At that point, I'm typically looking to do counter trend trades. Usually when they fall this much below the bands, if you get a false breakout below that low or a double bottom, when it goes back above that bar's high, it's a pretty safe place to get in, as you can see. And you got a nice 50 to 60 pip counter trend trade there. So there was a lot of good trades in the Euro Yen. And getting back to the actual chart on here, once the index broke its trend line here, right there at around 10, it's after 10 o'clock when that trend line got broken. If you go back to the Euro Yen chart, you can start more safely looking for counter trends. So here's 10 o'clock is when the trend line on the yen got broken, and it made one more wave down on this chart. It made a slightly lower low, false breakout, came back above. This is at that level. And so when you're just simply, most real traders have at least 2 monitors, and some have 4. I use 4, 1 30-inch and 3 24-inch monitors. So you're clearly watching your indexes of, if you're short the Euro Yen, you're watching what the Euro index is doing, what the Yen index is doing. If you're short, you want to see the Euro index either going sideways or down. You want to see the Yen go sideways or up. If a trend line after many hours gets broken, more than likely that it's going to reverse soon. And you can see 10 o'clock the Yen index trend line got broken, and it made one more wave up. The Yen index double topped while the Euro Yen actually made a slightly lower low because it's at the lower band here, because it's underneath our lower containment band, because it's at a double bottom. Great place for a counter trend trade. So let's look at some other trades here. The Swiss, when it double topped here at the hourly point of control, 5 o'clock is a great place to look to get in this. You can see the dollar's trend was up for the previous day. The previous week was down significantly though, so this is likely to be a resistance. So if you bought the dollar Swiss, when this hits this area around 6, you're going to be likely to be out of it. It's not likely to go much more. So from 5 to 6, dollar Swiss, excellent trade. Let's take a look at that chart. Some of these concepts might be easy, and some of them might be a little bit more advanced. That's just the way it is. You're not going to understand everything, but you can see from 5 to 6, what a great trade. 5 o'clock is either the dollar started getting strong or the Swiss got weak. This one kind of double bottomed right here. It's very close to the lower band. Here's 2 of the trades I would have taken. When it found support here and broke out. Notice the perfect oscillator is at an extreme, so you want to get out of that trade. Maybe you made 20 pips. You get long again here, and this is at an extreme again, so you're kind of just trailing that stop and probably would have got out somewhere up in here. I wouldn't have bought this breakout because this is your likely profit target, but this is a decent pullback for the Swiss. So I would have actually been watching it somewhere around here. I might have went long here and lost 6 pips, bought it again right here and made maybe 12. And at that point, it looks like this one's kind of topped out. So if you do get a move up to the 80 level, you can kind of look to do counter trends here and here. Notice, not that big of a move, but even a 10 pip move adds up. So don't look down on a 10 pip move. In fact, if you just net 10 pips per day, you'll double your account every 2 months, risking 2% of your account per trade. All right, let's look at some other, one more example for today's. The CAD is going sideways right here. It's at and trying to bust through the previous day's high. So when it breaks through here at 8:30, great one to be buying. You certainly want to buy it against the yen, which is strong, or the dollar, which is up. The euro's down. The Swiss is down. These two are weaker than the pound because the pound hasn't broke through the pound index's low through yesterday yet. So you're looking to sell the euro CAD. You're looking to sell the, you're looking to buy the CAD Swiss at 8:30. Very high probability trades. I would bet that both of these worked. Euro CAD 8:30. We're looking to sell it. So this one's down near the low. If you were actually watching this chart, you would have gone short right here. Anytime it goes sideways for 2 hours, that's a very high probability trade. At 8 o'clock right here, let's see, we'll take a look at what the index did, and of course at 8:30. It's not below the lower band yet, so you take a shot at it. And as this thing's coming down, it's pretty close to the lower band. You want to get out of that trade here. Not the biggest profit in the world, maybe 15 pips max, or if you got in a little bit earlier if you're watching the chart. Now once it's kind of gone down a little bit, you might want to wait for 1 or 2 waves up. First wave, second wave. You might have gone short right here, lost a little bit, short again here, got your loss back, not made much more. Let's take a look at what both indexes were looking at 8. At 8 o'clock, the euro, a little bit before 8 actually, this one, let's zoom in on this so we can see it more clearly. And as you zoom in, it automatically rescales. So at 8 o'clock, as you're watching this, you can see you got a nice little pullback right here. Before 8. This one, the trend was down, sideways here for about 40 minutes, breaks down about 5 to 10 minutes before 8 actually. So you had a little bit of a window watching the euro for that trade around a little bit before 8. Let's zoom in on the CAD to see what it looked like around 8, a little bit before 8. So you don't have unfortunately you don't have the same perfect trade in the CAD. It does find support here. It's not going any lower, but it is underneath the hourly. It did bust through the high before and didn't really pull back that much. So a little bit around 8, you're kind of expecting a breakout to the upside. And 5 to 10 minutes before 8, the euro was looking weak. So that's how the indexes actually help you. The euro was going down against other currencies right here. 15 minutes before that last drop. You probably, if you were watching that live, maybe got into this trade short around 17 or when it broke the low here at 14 with your stop right above the high. Very, very tight stop, and anytime one currency is weak and the other one's strong, most of the time it will work its way to the 1.618. So the reason I like using the indexes, not only is it because I feel it's a very high win rate. If you go short right there with your stop above here, this is your risk. Your profit target when you have one currency super strong and the other one super weak is down here. And as you can see, that's maybe 2.8 to 3 times bigger than what your risk is. If you're right half the time and you lose 10 pips when you're wrong and make 20 to 30 pips when you're right, you're going to do very well as a trader. And that's the reason why I like to show this during our blog video. Now I'd like to end today's blog with some of the new features that we put in today. First, we have now the weekly point of control for the currency charts, and I just noticed on here I got to make sure that that works live. I'll release another one tonight that does that. And it also shows how many pips the point of control for the previous day and previous week went up or down. If it went up, it says up and it's also above the line. If it goes down, it actually shows it underneath it. So it's very intuitive. Underneath the line, it went down, above the line, it went up. But I also, just to be clear, put down or up on there and how many pips it moved. That is also in the actual chart too. Oops. If you add the value areas onto a chart, you will see that the number of pips up or down that it goes, FX value areas, it will show you how many pips the point of, actually all the levels went up or down. So you can see all those levels fell the previous week. The value area low was down 30 pips yesterday, and of course it's not able to get above that today. Very high probability. This is more of an advanced, using our volume profile info is more advanced, but you can see that that really helps out knowing. The point of control in the euro yen fell 232 points yesterday from the previous day's point of control. The previous week's level also fell, because you can see it's underneath there. And so it couldn't get above that area today. Pretty high probability sell right here, here, and here. And this point of control of yesterday is normally likely to be support, but because it was down 232 pips from the previous day, you know not to be buying this level. In fact, when it can't get above the upper value area of yesterday, you look to go short, because you know that these things have all fallen considerable amount. Let's just pick a random currency on here. Dollar CAD. The dollar CAD had a pretty decent sized move down yesterday. This is a value area low. Let's zoom out a little bit. So this is very likely to be the high of the move. And because you can see quickly on a 5-minute chart that the previous week fell a considerable amount, the previous day fell a considerable amount, you might want to draw your fibs on here and look to go short at the 1.382 fib. This is a more advanced trading method, but knowing what happened during the previous day and previous weeks with the value profile levels really helps out. So we've updated those to tell you how far they've moved from previous day to previous day, or previous week to the week before, and we also put those weekly profiles onto the indexes. And remember, the indexes work on any time frame. You can and you can also zoom in and out to see levels.